Good morning, Campbell McCurry here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. Live webinar with Adventus Mining Corporation. Adventus trades on the venture as ADZN and as ADVZF on the OTCQX. Hope you'll enjoy today's program. It'll also be available in replay mode. Q&A is an important part of what we do, and so please message in your questions and we'll ask them in real time of our host today. Amvest is a New York-based specialist investment management and corporate finance firm sold in the natural resource sector. And please note, this call is for informational purposes only. Please read this disclaimer carefully. Pleased to have with us today Christian Kargl-Simard, who's the president and CEO of Adventus, making you presenter. If you want to turn on your webcam, Christian, and understand you've got some exciting news that came out the other day. Real important stuff on VMS discoveries, and so please tell us about that, and also take us through the story one more time.
So Campbell, can you see my my presentation? Okay.
I can, but turn on your webcam. So just click on the camera again. So.
Okay, is that on now?
Yeah, beautiful.
Okay.
So see you on the other side, and thanks everyone.
Thank you, Campbell, and hello to everyone. I believe many of you registered today have heard me speak before, so I'll hit more of the salient points today and some of the updates since we last spoke on Amvest in May. Some forward-looking statements that everyone should be aware of, and right into it. So similar to earlier this year, our focus is on the El Domo copper gold project. In our view, the most economic copper development project in the world, and one that has a path to production sooner than most projects, with construction expected to start end of next year and production the first half of 2024. We are so economic due to the high grade nature of our project, the fact that the majority of it is open pittable. It definitely has, if not the lowest, some of the lowest capital intensity of any copper development projects in the world, and that's again open pit grade, and in fact it's a volcanic massive sulfide project. We have some key deliverables coming into the fall, which we're very excited about. First and foremost is the long-awaited feasibility study, which is on track for October delivery. In tandem with that, we've been working on the environmental social impact assessment, the ESIA, which is delayed about a month here, just because we're socializing it with the current government and the environment minister. But we expect to submit the draft probably now October, and we're well down the track on project financing, which we'd like to announce by the end of this year, ideally. But we also have some interesting developments from an M&A interest perspective as well that we need to balance accordingly. We have been advancing exploration on all three of our projects. We just announced, as Campbell said earlier this week, a new discovery, a VMS discovery within our Curipamba district, about 4.5 kilometers away from El Domo. This is a material development. It's the first time we have made a new VMS system discovery in the district ever, and we've only been looking since May of this year. So I think it bodes well for the results of our airborne geophysical work, which helped target this new discovery, and also for the other 14 targets that are yet to be drilled. We have a drill with the Santiago porphyry. This, for those that know the story, is our high-profile discovery opportunity, which is our chance to have something that mirrors what Filo Mining or Solaris or SolGold has discovered, and we hope to have first assays out this fall. We increased our treasury in July of this year with some non-core asset sales, so we're sitting with around 16 million US. That's expanded our timeline with our current treasury to the second quarter of next year. We hope to make a construction decision in early next year, and reminder, our shareholder base is is primarily 4 financial strategics, 35 global institutions. Our ESAA has Equator principles. We're driven by World Gold Council ESG criteria, and we have a unique setup in Ecuador to hedge our risks in country with an all-Ecuadorian team. Nobis, which is equivalent to the Rockefeller family of the US, Nobis is to Ecuador. They're a major shareholder of ours. And the Salazar's, Ecuador's top exploration group, is a minority owner in all 3 of our copper gold districts. Why copper and metals in general? I'll make this quick. In my view is that over the next 30 years, you're going to see a transition, a steady transition from fossil fuels to metals, and copper is going to be the metal that wins most out of that. So we're well positioned in Ecuador as one of the top jurisdictions in the world for copper exploration, and all 3 of our projects being copper gold projects. El Domo, going to the point of the next project to be built, there's a lot of very good projects out there, but I think it's one thing to find a good project, another thing to find a project that has a path to production in the near term. And this pyramid is meant to show the top of the pyramid are those projects that are just starting production or in construction. The middle of the pyramid is really a bare cupboard in terms of the next projects to start construction and be in production by 2020, by the end of 2024. And then there's a whole host of projects that could be in production over the next 15 years. And of the middle and bottom of the pyramid, our El Domo project would be top 3 in any category tied to lowest cash cost or best capital efficiency, which is why we are head down driving as quickly as we can to get this thing into production in early 2024. But at the same time, it's a very interesting project for take your pick copper producer or even gold producers that are looking for a copper component. Simple cap structure, 131 million shares out. Our enterprise value today is about 100 million Canadian or 80 million US. Kind of ridiculous when you think of the NPV after tax at current prices on a 100% ownership basis in the 400 to 500 million US range. We also financed last August $38 million Canadian at $1.27 Canadian a share. Copper prices, as you know, have added $1.50 since then, and we're sitting at 94 cents a share. So in my view, this is by far the cheapest copper development story, copper exploration development story in the market, and it's also the top base metal developer pick of several of the Canadian banks and brokers. Through this summer, apparently no inflation and people going on vacation, we have sold off, although our volumes have been fairly strong, primarily retail buying, some institutional selling that's ongoing right now. Shareholder base, as mentioned, long-term shareholders. We've been able to raise 100 million Canadian over the last 4.5 years. So raising capital has not been an issue. We have very supportive shareholders to see us through to construction over the next few years. Although a lot of the shareholders are also in for exploration. So the best from exploration is ahead of us, both regionally at Curipamba and at Santiago. Nobis, we've talked about them before. Isabelita Noboa, top business person in South America. They've been an amazing group to work with. They've helped us navigate governments, and they're very excited with us to see our project advance to the different stages, but also from an exploration perspective as well. Our team is shown in blue here. So we got 7 officers that come from major mining companies, but under Dustin Small, our VP projects, he's built an owner's team with people that he's built mines in the past with that are working with us through the feasibility study, but also now in the execution phase of the project. We're well down the line of selecting an EPCM contractor and expanding the team to start the detail engineering early next year. ESG perspective, Ecuador is 90% hydroelectric power. We're expected to be connected to the grid with power costs in the 7 to 11 cent kilowatt hour range. We have a very small footprint driven by the high grade of the project, and we're a short drive away to the deepwater port that Nobis co-owns with DP World, where we'll be shipping out our concentrates. This year, we've done 2 rounds of community consultations ahead of the submittal of the ESIA. The first round was in May of this year with 11 communities, and we've gone back to those same 11 communities over the last few weeks in more detailed communication with their feedback driving part of the social aspects of the ESIA. But we've got good community relationships, we've got good provincial relationships, and we're dealing with all the key ministers that are involved in mining right now to drive this project forward as a project of national interest. This map reminds people where our projects are. You can see where our Curipamba project is, northeast of Guayaquil. We are surrounded by Anglo Gold or Anglo American with Luminex looking for porphyries around Curipamba. We surround Southern Copper at Pijili. We made a new discovery there earlier this year, and we're adjacent to Newcrest on the Santiago project. A few things have happened over the last few months that are worth noting. INV Metals, which has the Loma Larga project outside of Cuenca, was acquired by Dundee Precious Metals in a plus $100 million transaction there right after Lasso had been elected into government. And last Thursday, President Lasso signed a decree really bolstering the mining sector, making it a core focus of Lasso going forward, fast-tracking permitting, assisting projects of national interest with additional resources, reopening the cadastre in the next 100 days, and really making a key point to the investment community that Ecuador is open for investment in mining. Lasso would like to see $2 billion of investment in the mining sector during his 4-year tenure at a minimum, which with Curipamba likely taking the lion's share or the largest chunk of that $2 billion as it's a construction ready project. And definitely a different tone and path going forward here than what's occurring in Peru and Chile and other countries in Latin America right now. This resource is the same as we talked about in the past. We've just gotten a draft of the new resource last week based on the infill and definition drilling program, which we're excited to see and will form the basis of the new resources for the feasibility study, but also the resources that will convert to reserves here over the next few weeks as part of the feasibility study. We continue to finalize all the land acquisition path to get to a fully owned area to build a mine. We just have a few packages left to go. And as a reminder, we've got a joint venture with the Salazars here. The way this works here is we've spent $38 million US over 3.5 years of getting into this project. So well ahead of schedule as we're progressing aggressively to a construction stage. Once we complete the feasibility study in October, we'll have earned in to the project. We as Adventus have to fund 100% of the capital costs to get to commercial production. And then we receive 95% of the free cash flow from the project until all of our investment is recouped. And then after that, the ownership drops 75 to 25. Because we are providing 100% of the capex, Adventus has 100% of the offtake rights and has the right to encumber 100% of the cash flows from the project with project financing solutions such as debt or streaming or combinations thereof. So we're well down the path of putting together a package that funds 100% of the capex to commercial production with only 2 groups on very attractive terms. A couple years ago, we flew airborne geophysics for the first time. The stars indicate geophysical targets that are undrilled. We announced on Monday of this week a new discovery at the Agua Santa target, just in the road to the El Domo project. This is actually the main road to El Domo mine and mill, which will be built over the next few years. This is a very strategic announcement, this discovery, in that we've proved that there are additional VMS systems in the district. So VMSs tend to occur in clusters, but it's not a guarantee until you find another discovery. And it opens up the whole district for new discovery and hopefully finding 20, 30, 40 million tons of VMS in due course here. Let's talk about the discovery. So it's 4.5 kilometers southwest from El Domo, about 500 meters, a lower elevation than El Domo. We drilled our discovery hole, which was Craig 8, and that was 6.3 meters of about 5.5% copper equivalent, about 60 meters below surface. We drilled a vertical north-south fence line because at the time we made the discovery, we didn't know the land position covering the blue circle and the majority of the red circle. Since then, we've purchased a major farm covering the majority of the geophysical target. And as a result, last week we started the hole in more of the heart of the bullseye of the geophysical anomaly. That's why you see this unusual drill pattern. Following results will come up, will be press released over the next few months. But what gets us excited about this, not only that we tagged this VMS in the geophysical anomaly and it's a new discovery, is the geology is really exciting. So you see 1.3 meters, 1.4 meters of very nice massive sulfides, and the rest of the hole are semi-massive sulfides, including bornite that you see in this picture. This is the first time we see bornite within the district, and of course you want to know where the source is. So when you see these kind of rocks, you're either part of a robust system, but you're either tagging part of a new resource that's going to come together, or this is replacement type material that could be part of a significant VMS system nearby. So we have to drill. El Domo was discovered in the 37th hole. This was a discovery in the first hole in the system. You've seen this slide before. Those that know the story, just as a reminder, the open pit resources in the foreground. We have drilled over the last 9 months the highest grade copper equivalent drill results in the world. The key thing is these results are all 30 to 100 meters below surface. So it forms the open pit. So the feasibility study is coming out in October. From the market perspective, it looks like we've gone from a PEA to a feasibility study. We actually did an internal pre-feasibility study December, January of last year, this year, which gave us confidence in the feasibility study, completed all the trade-off studies, improved on the PEA, and now we are quite confident we'll deliver a very nice product to the market along the lines of the PEA, but we expect better numbers on the NPV and IRR basis using current long-term prices. So again, from a timing perspective, ESIA submittal over the next few months, feasibility study in October, start an investment agreement with the government of Ecuador in October. Project finance. So as mentioned, we're well down the path. If we are going to stick to the start of construction in the fourth quarter of next year, we do need to execute in project finance late this year, call it December. If we sell the company, well, we probably won't execute in project finance, and you may see a transaction by the end of this year. But we're definitely in that corridor here where it's build versus sell, and we're evaluating all the strategic alternatives over the next 6 months. The good thing is we have lots of alternatives on the table that I think will be value accretive for both Adventus and our minority partner Salazar. The ESIA, we expect up to 12 months for approval. Fruta Norte took less than that. The government is mandating fast tracking these permits, so we hope to be able to do it significantly shorter than 12 months. And it's about a 14-month construction period once in full-scale construction. Then we've got the big porphyry exploration activities. Last April, we made a new discovery at our Pijili porphyry. This was the first of 18 porphyry targets in the district. It confirmed our target generation activities. We've been working on the second, third, and fourth targets to be drilled within the district. They will be groomed over the next few months for drilling in 2022. And our most exciting target is the Pato target, which is about 8 kilometers to the west of the new discovery we made. And that should be ready for drilling late this year, fully permitted, and with a lot of interesting geological features. The most exciting target left for drilling this year is our Santiago project, which we expect initial assays in the fourth quarter of this year. So I'll skip over Pijili and really focus again on Santiago. So we're adjacent to what I believe is the largest earn-in deal in the world for any kind of greenfields project. It's a $110 million earn-in between Newcrest and Cornerstone. Newcrest is currently hiring about 100 people from the town of Wallel to advance their exploration activities. El Cisne is a top exploration target of SolGold in Ecuador. And our particular target of interest is this light green circular feature, which partially goes onto Newcrest land, which is a bona fide porphyry. I'll skip to this slide here. This is my favorite slide in the deck. It shows clearly what the key target is. We have these 20 drill holes from Newmont in the mid-90s with some terrific numbers from surface. Copper gold, 323 meters of 0.65% copper equivalent, 171 meters of 0.91. A few years ago, we flew airborne geophysics. This yellow dashed line indicates the top of this large mag-low feature, which is where you would find the sulfide mineralization called a porphyry. This is 3 kilometers across, 2.2 kilometers deep, 2 kilometers into the page. So our first hole here is twinning that FUD1 hole from Newmont. So hopefully we see something like 323 meters of 0.65% copper equivalent, and we go down 1.5 kilometers. We have budgeted 3,000 to 4,000 meters here in 3 to 4 holes. This is our version, Adventus Salazar, of what Filo Mining has, what Solaris has, what SolGold has, what the market is looking for, and has rewarded those companies with billion-dollar market caps. So the read-through here is if we can drill a kilometer plus of 0.6, 0.7% copper equivalent or better, we hope to see hundreds of millions of dollars of value accretion from that. So the most exciting point of this company, Adventus, which was just created about 5 years ago, is over the next 6 months. We made a new discovery at Agua Santa, a big proof of concept win. Hopefully we're on our way to multiple VMS discoveries in the district. We've expanded our regional program from 4,000 to 6,000 meters this year as a result. We have the feasibility study coming out in October. We've got the ESIA that we'll submit there in Q4 and start the clock on that timing to construction. We've got the Santiago exploration program with results coming out hopefully in October on assays. That's really a transformational project for us. We are in advanced stage of the project finance package and are balancing that with M&A interest as well as the modules from the feasibility study come out. And separately, we have South32 in Ireland drilling minimum 4,500 meters this year in our projects, which we're ultimately going to own 30% of, but it's additional upside to our shareholders. Over to you, Campbell.
Very good. Thank you all for sending in your questions, and we'll just sort of warm up with the tax and royalty framework for Ecuador. How does it fit as for a mid-sized mine, and how does this compare with the other tax and royalty frameworks of the other major producing companies in Latin America?
Yeah, no, good question. So we all know Peru and Chile are going through some uncertain times when it comes to tax and royalties. I wouldn't be surprised if they settle on an effective burden to the project similar to Ecuador. So I don't see the current regime changing much in Ecuador. It seems to work between private enterprise and government. We are a mid-sized project, so we're just under the 2,000 tons per day, and the burden is a 4% royalty to the government, a 25% corporate tax rate, a tax on EBIT, and VAT. So when you put it all together, you're looking at 43 to 44% overall burden for the project, but you're sitting with such high grades that you're able to easily withstand that and have a very robust project. If you're in a large scale category like Fruta Norte is, Mirador is, INV's project, your royalty, and depending on the commodity you're in, there's a negotiation with the government, but your royalty is likely between 6 to 8%. And so your total effective burden is going to be in the high 40% range. What you get with that, though, in Ecuador is a fiscal stability agreement, an investment stability agreement, which gives a lot of comfort to investors in the country. And the government recently signed on to the standard of international arbitration and dispute resolution. So LASO signed that just in the last few weeks, which is very important for our industry going forward and should give a lot of comfort to investors as well.
Very good. Do you expect the resource on which the feasibility study will be based to be similar to the current defined resource?
Another good question. So I'm sure a lot of people following the story really like those results over the last 9 months. The main reason for that infill drilling was to produce 10 tons of composite material for a substantial final metallurgical program, but also have excess material to do additional optimization during the construction period. That feasibility stage metallurgical program has gone exceptionally well. So that was the first reason. The second reason was to upgrade as much of the resource to the measured category, and you're going to see a substantial increase to the measured category going forward. And thirdly was to upgrade as much of this inferred to measured and indicated. We're very pleased with the outcome of the resource. It's likely not to come as an individual press release before the feasibility study, but it's currently being used to process the reserves. And I think my expectation is they're going to be positive downstream effects with the new resource.
How many holes have been drilled in or around Agua Santa, and have these been published and assayed as well?
So the discovery hole was drilled in June of this year and was announced on Monday of this week. The other holes, you can see Craig 9 to Craig 13, which are in that north-south and with one step or undercut hole. Those were drilled over the last 2 months. Those samples are being sent to the labs. We do not have assays back on that. And then Craig 14 is in progress right now. So the first hole ever into Agua Santa is the discovery hole. The closest hole ever to Agua Santa drilled was down in Sesmo Sur, and that was drilled in 2008, and that's several kilometers away from Agua Santa. So it's a bona fide discovery.
Any news regarding La Vaquera target?
Yeah, we put out a press release on that in May of this year. So we entered this year with a wish list of drilling these stars, and we had a 7-hole program planned for La Vaquera. We drilled 3 in January, February. We announced the results in May that they didn't hit any sulfides. We were in green rocks, which is interesting, but we took a step back at that point in February to use that drill rig to fast track the completion of the infill drilling at El Domo. And that allowed us to gain a few months to fine tune our target generation in the district, which resulted in Agua Santa being a top target. And then we started drilling that in the second quarter of this year. So Lava Care is a work in progress. We still like it, but we need to do more surface work before we go back there.
How would a discovery at Santiago impact M&A interest?
Another very good question. We're hopeful that Santiago is what I discussed, a major new discovery. I think it's strategic from putting Adventus on the radar screen of a lot more institutions and corporates, and should definitely open up our financing alternatives from what is already very good to maybe even better. One of the potential outcomes that could come out of it is either through M&A or organically a separation of the company into Curipamba Development Co. and porphyry exploration company, and that could be done on the back of a significant financing after discovery. So it's a good problem to have, but most of the interested M&A parties that we see today are interested just in Curipamba, and if we did go ahead still with M&A this year, after Santiago discovery, you would probably still see a split of the company.
Until recently, the financing was supposed to come in before the feasibility study. Can you elaborate what changed here?
Yeah, I was expecting that question. So we have been negotiating and finalizing the project finance package through the summer. Some of the modules that we were expecting in July, we're now getting in August, maybe early September. So that's been a delay, and we need to see that in order to finance or in order to finalize the package. Then you're in a situation where you are perhaps a month away from announcing the feasibility study. So that's one aspect. The second aspect is due to M&A interest and certain groups perhaps not wanting to have a project finance package in place. In my view, it actually helps M&A, but some of the groups that are all on the table right now, they don't want it in place. We pushed it back to the end of this year. We, as mentioned, need to stay on this execution plan, and the latest that we see we can announce that package is probably December, maybe it's January. So there's an M&A aspect to it as well, but between those two, we just said let's push it later this year.
With 138 million shares fully diluted, you are leveraged to discovery. Agua Santa geophysics anomaly is of what strike length? Dip is rather subvertical, yes?
Yeah, it's a different orientation than El Domo, which El Domo is kind of flat like a pancake. This seems more vertical. It's premature to indicate what we're actually seeing here and what it's going to be. But if we look at the airborne geophysics, this anomaly is about 70% of the size that's on top of El Domo.
Okay, thank you. I'm gonna give it over to Adam to ask more Amvest questions, and then we'll circle back to some more audience questions. So Adam, have at it.
All right, great. Thank you, Campbell. Great presentation so far, Christian. Really appreciate it. Just thinking about the specifics of the near-term operation. Can you talk about the payability of the metals in the concentrates as you've outlined in the PEA, and if that payability is rates, or if those payability rates are going to be refined in the feasibility study?
Yeah, we've had at least a dozen offtake groups contact us for the offtake on this project. We have an offtake specialist who said these are super concentrates. You can sell them anywhere. We had one offtake group really step up, provide formal terms to us for life of mine, which has added decent NPV to the project. Where we're coming out on the metallurgy is we've added a few percent to the copper head grade on the concentrate, same on the zinc. As mentioned, we've improved the recoveries across the board, but we've also therefore improved concentrate quality. I mentioned we've got deleterious elements as penalties. We have a slight penalty for zinc in the copper con, but that's minor. And by increasing the concentrate grades, you're also decreasing transportation costs. So all of that is fed into international benchmark terms, but also a more formal matrix that we plug into the model, and as mentioned, has improved the economics of the project. The metallurgy has really become a strength of this project. We have a super robust flow sheet here that is going to be very helpful during the operational phase of the project.
So other than a little bit of zinc that you guys can't separate in the copper con, otherwise separation is good, and no deleterious elements, and you don't need any kind of an ultra fine grind. Is that what I'm hearing?
No ultra fine grind. The copper or the zinc level in the copper con, we're looking at in the 6 to 7.5% range on a blended life of mine basis, which is a few $1 million total penalty over life of mine, and very analogous to several operating mines in the world. Matsa in Spain would be a good example. We have added a lead concentrate as well since the PEA that is saleable, brings a bunch of the precious metals into it, and has also helped in cleaning up the copper and the zinc concentrates as well.
Are you going to announce prior to the feasibility study the results of that revised flow sheet with the lead?
We're not. We put out a press release in July of this year. It was a feasibility study update covering all of the key aspects of the project, and there was a mention on the metallurgy and how it was trending. In that release, we also indicated we bought the construction, or one of the construction camps used for Fruta Norte, which has decreased our overall construction cost. That was, I think, the piece prior to the feasibility study. We hadn't updated the market since December of last year, so it was worth an update on timing, etc. And we're trending to the middle of October for plus or minus for that release. So that's less than 2 months away. There's no need to put additional releases out.
And Christian, I'm just thinking of this now since we're talking about metallurgy. Perhaps for the benefit of the audience, you could talk a little bit about just the generic process here, where you're, I presume, I don't remember off the top of my head, you have a 3-stage crush and ball, and you're making 3 cons, and then how those cons, are typically, in your case, I assume is sold to a trader, and then they're taking those cons and selling those to smelters, and you just walk through the process there for the benefit of our audience.
Yeah, because Ecuador is not a major mining country, we are designing this project to be as simple as possible. And that covers all facets of the project, including metallurgy. So no new technologies, no fine grinding, nothing like that. So we've got a straight flotation process. We got a ball mill that with a crush grind to 125 microns, and then we got a regrind circuit, which is being optimized right now, but it is called the 25 micron size. And it's sequential flotation here. You remove the lead first, as mentioned, to clean up. It ends up cleaning up the mineralogy a bit, which then the subsequent copper and zinc concentrates are good quality. We package the concentrates, put it on a truck, 2.5 to 3 hours away, drive to the deep water port outside of Guayaquil that Nobis co-owns, and then it's likely freight on board there with whichever off-taker we go with to take your pick smelter in the world.
And then I presume, Christian, that you know, me being a little cynical here, but this is sort of how it works: is whoever's buying your copper con is probably going to blend it down, and so to get the zinc down below, you know, what they have to pay a penalty for, so then they'll sell it to a smelter without paying the penalties.
That's possible. The penalty threshold starts between 4 and 5%, and as mentioned, we're 6.5 to 7.5, or 6 to 7.5. It's really minor. I don't think it would be worth doing that for saving a couple $100,000, but it depends on the group.
Let's see. So we talked about you guys are in talks with global traders for the offtake. I guess I'm switching off of sort of the detail here of metallurgy, Christian, and just going much bigger picture. You know, can you talk a little bit about what it would take if you guys decide to build this? Nobody comes in or you guys decide not to sell it, or the price isn't right, or whatever, and you guys decide to build this yourself. Talk a little bit about, you know, what it takes to really transition a company from a explorer developer to a producer.
That's a fantastic question, and really has been the main focal point of our board meetings in the last few months. We got monthly steering committee meetings with our major investors. It's all about preparation to go from an exploration company. Now we're more in development phase, but now to execution. Major shift in so many different aspects, let alone IT and accounting and software and those kind of things. As mentioned, we're working in parallel on the feasibility study with an EPCM group. We've got a proposal in place that we like. We're probably going to be negotiating a contract in the fall. We need to add in the first call it 6 months of next year, a dozen additional positions in the company. So we've got shortlisted or people picked for each of those positions to join us. And there's a substantial investment of about 25 million US that's required from the point of starting, you know, construction light, and board making construction light decision and full scale construction. That takes 9 months. And during that 9 months, you're building up all of those internal capabilities. So we're doing all of that right now. We're preparing all of that for that 9-month start in January. You wouldn't do that without guarantees on or significantly down the track on project financing. A lot of single asset developers focus on putting together a feasibility study with a bow on it and praying and hoping that they sell the project. And they're not thinking at all about this execution planning. But we've got the most economic copper development project in the world, where copper is $4.30 a pound. Why wouldn't you be advancing as quickly as you can this project to that execution phase of the project? So that gives you a sense of where we're at. We can't assume that this company is going to be sold. You have to be proactive and assume you're going to build it. And we've got all of those pieces in motion for next year.
I guess, Christian, along with that is how are you going to maintain your exploration and discovery focus while at the same time making this major transition of the company's focus to becoming a producer?
Another very good question. So obviously it's all about money and access to money, but our shareholders definitely want us to explore. So our view is that we will set a benchmark exploration budget per annum as part of the execution of the project. But we also need to think of, okay, we just made a discovery at Agua Santa. The market didn't move on it. Surprising to us, but it didn't move. So we didn't get a return of investment on that first hole, albeit it's the first hole, and the first hole doesn't make a resource. So we've added budget to exploration this year to see if we can grow on Agua Santa in a resource and make some additional discoveries in the district. If that exploration and drilling has success, but it's not being valued in the market, then we do need to reevaluate some of those exploration dollars and what we're exploring on. At Santiago, if we make that big discovery and leads to significant share appreciation, access to capital, of course, that's self-fulfilling. But if it doesn't, then we might have to pare back there. And then the second path to all of that is there may be a difference in shareholders that want development versus exploration, and it may lead to separating the company with the project finance packages that I mentioned about going forward with Curipamba Co. and in a different set of investors continuing to advance the exploration activities of Pijili and Santiago and perhaps additional projects coming in. These are all things you got to think about because we don't want to spend money just for the sake of it and not see shareholder returns.
Certainly. Very good. Let me pass it back because I think there's some more questions from the audience. Let me pass it back to Campbell.
Sure.
And we'll go from there.
So kind of pulling it back a second, slightly more macro. How does the public in your opinion, how's the public generally feel about mining in Ecuador, or what's the emerging consensus, let's say? And would you call Adventus popular with the locals? So this is sort of an ESG question, I suppose. So.
Well, Ecuador currently has 2 of the $3 billion plus market cap base metal developers, with Filo Mining being in Argentina. So it's rewarded the exploration development space. It continues to be, based on my calculations, the top exploration dollar spent jurisdiction for copper in the world from a public markets perspective. So this year you saw significant financings from Solaris and SolGold as an example. So I think that's enough to indicate that it's open for business and people are comfortable with it. And the new Lasso government has provided that comfort in the market. Specifically in social license to operate and Curipamba, as mentioned, we had very constructive community consultation meetings, 2 rounds of it, hundreds of people. Number 1 priority is jobs. Number 2 priority is jobs. Number 3 is making sure water stays pristine. And we had good questions or good answers for those questions, and it's just a good dialogue here with our communities, and we feel like it's a supportive region for getting the ESA and our project moving forward. We have very good relations at Pijili and at Santiago. The reason it took us so long to drill there is, number 1, because of COVID, and number 2, we had to spend a substantial amount of time on the social and community aspects, getting the local communities to buy into our program, which we think we've got.
I understand there was a change in the staffing of, or the Minister of Mines changed. How does this affect you? Did it affect you?
So under the new Lasso government, there were all new ministers appointed, and the natural resources minister oversees mining, oil and gas, and electricity. And just recently, the sub-minister to the natural resources minister in mining was appointed. And we expect to meet with him formally shortly, although Salazar's, our partners, have a representative on the Chamber of Mines, and there have been multiple meetings with Lasso and that new Vice Minister of Mines over the last while.
Do you think the situation in Chile and Peru has changed the tenor of discussions with potential suitors?
I do have anecdotal evidence of groups that were looking at projects in those jurisdictions that are no longer looking there.
Right. kind of going over on that note, when is the point of no return when it comes to developing yourself or selling the project? This would tie into, you know, organizing contracts, fixed contracts and off takes and stuff. When do you, what is that point of no return for?
So I would call it 3 phases. The first phase is this next 6 months where we're delivering on these key milestones, and there's a question of, do we start executing an execution plan with the project financing package or not? So that's a logical time for M&A. There's a second phase where you're starting to execute on detail engineering, long lead items. You got the project finance, at least mandate announced, and during that period of time, M&A is possible, although you're spending real money and time on a certain design that perhaps the acquirer would change. So there's less flexibility unless you're going to delay the project going forward. And then there's the point of no return, I would say, once you start construction. You've gone through the heavy lifting of the ESIA, the detail engineering, long lead items, building an execution team. You built up all that difficult part of transitioning a company like an Adventus. At that point, you're going to build it, and you're going to look to re-rate once you've executed and once you got the cash flow, and then hopefully build a major mining company after that. So hopefully that answers your question.
I guess if loading up with contracts and off takes, does that start to make the project slightly less attractive because the acquirer kind of wants to do it themselves or in their own way?
Yeah, it depends on how the contracts are. I mean, if your offtake is to international benchmark terms and is very commercial, that shouldn't hurt M&A with Western groups. It would definitely hurt, I think, more Asian groups, call it. I think it's important to mention that Ecuador is a new mining country, and by that definition, it eliminates a lot of the standard players that would be, let's say, for a copper project in Canada. I would say eliminates 2/3 of the potential financiers and more strategic kind of project financiers in the world. Mm-hmm. And you're a country that I would characterize as 3 steps forward, 1 step back. So if you're able to find groups that are like-minded with you, that are flexible, that got attractive cost of capital and are ready to invest in Ecuador, you need to hang on to those. And likely, in our view, those type of groups may actually help M&A and deter because it de-risks the finance and development aspect for acquirers. So it's a debate on whether project financing offtake would help or hurt M&A. I would argue it depends on the group, and it's kind of a mixed playing field. But you can't run a company where you're waiting for M&A to happen. You have to maximize value and maximize the biggest sensitivity to the net asset value of this company is when you start production. And this is one of the rare projects where finance is not your rate limiting step. Most projects, it's raising $1 billion. How do you get there? The rate limiting step is how quickly you get the ESIA and how quickly you can start construction here.
Okay. Really kind of one last question. You're Ecuador all day long. Would you ever geographically diversify elsewhere or within Latin America, or not really on the table?
Not an exploration development phase. Investors have a whole host of copper stories they can invest elsewhere. I think that would muddy the waters at this point. Once in production, there are not any near-term other copper mines in Ecuador, and so that would fit with Adventus Salazar or with Curipamba. So we would look outside of the country for development or production assets if and after in commercial production. But over the next few years, we're definitely focused solely on Ecuador.
Okay, I'm going to pass it over back to Adam. He's got one more question, and then we absolutely will close. But
great, Christian. One last question. We didn't talk about the life of mine expansion potential, and you know, I wouldn't expect you guys to really be focusing on that until you know, until you guys are in production. But you know, what is the potential there to expand the life of mine of the existing operations without shifting to a new nearby discovery for feed?
Yeah, so this figure here shows the open pit outline in the foreground. Open pit is the basis of the feasibility study, which is 10 to 11 years of mine life. What you see underneath this dome, and moving to the east here in the picture, is an underground component to the resource, which is being updated and will be updated for the feasibility study. There will be a section in the feasibility study dedicated to the underground on an updated PEA basis. So completely separate, you'll be able to add the NPV of the feasibility study open pit and the NPV of the underground PEA stage together to come up with a blended NPV for the project, which is analogous to what the PEA was a few years ago. But that isn't the optimized development strategy. The optimized development strategy is developing the underground in tandem with the open pit and having the underground start likely in year 5 or 6 of the mine life, moving out some of the open pit ore for later on, and having an optimized, say, 12 or 13 years of mine life at a higher production rate over that period of time, and potentially even increase in the capacity of the mill. 43-101 doesn't allow it at this point because the PEA or the underground's at PEA stage, the feasibility study stage. But definitely once we're in production, we're going to really hammer the infill drilling of El Domo, maybe drive and add it in there and get that into production sooner than later with an estimated construction cost for the underground of 20 to 25 million. So for those M&A parties that are looking for a little bit higher production rates, there is a way to get there by adding the underground sooner in the mine plan. And that's of course not taking into account any new discoveries regionally.
Christian, just related to that, is it going to be in the actual construction plan to size the foundations of the mill for, you know, for a future expansion?
Definitely the tailings. So the simple answer is yes. It will be fairly easily expandable. There's definitely tailings and waste rock capacity. There is another intermediate add-on that we do from cash flow, adding a sartan cyanidation circuit to improve the recoveries of gold, silver, and copper. So that's another bump up on production that would cost about $40 million to do, but it doesn't make sense from an execution perspective, a net asset value perspective, or an IRR perspective to be doing that now. So everything's been designed again to maximize those 3 aspects I just mentioned, which is starting with the simple open pit.
All right, so what is it, 1750 ton per day throughput, whatever it was in the PEA, that's going to be the throughput you design the mill for?
It's 1850 tons per day in the feasibility study. That has been optimized to maximize the economics of the project.
Okay, so if you expand, it'll really be by supplementing the open pit ore with higher grade underground ore and then extending the mine life at 1850 tons a day.
That's the way we're thinking about it today, but you could also shorten the mine life, barring new discovery, you could shorten the mine life, do the same supplementation by, let's say, adding another 750 tons per day as well.
Yeah, so, but at least if you're not laying the foundations for a bigger, for a mill expansion, at least you're gonna hopefully space it so you can fit it in?
Correct.
Okay. So thank you, Chris. Appreciate that. With that, I'll throw it back to Campbell and you for closing remarks.
Yeah, we're going to close now. It's been a good hour. I want to thank everyone for tuning in and for your great questions. You can send some more. I'll make sure Christian gets them. Please share your feedback on your way out or in the in one of the emails, follow-up emails, and you can get a copy of this recording in about an hour at amvestcapital.com/replays. And you know what? You should share it with your friends. With that, I will pass it back to Christian to give us a quick close. Thank you.
Oh, well, thank you, Campbell and Adam for hosting us. Very good questions. That's probably the most thorough question Q&A session I've had to date. But I think it was candid and helps all current investors, kind of hopefully new investors, see how we think about the world and all the optionality we have in front of us. So thank you very much.
All right. Thank you, everyone. Have a great rest of your week.